2, 1. Hey, my friends, we are going live. If y'all want to see better viewing of the screens, Cherry, go ahead and go on my Facebook Live and post the link. Okay, post the link. So if they want to get access to a better view of the slides, they can get that. So Cherry's going to post that in the comments in a minute on Facebook Live for those of you on here. If not, you'll see the TV screen here. We're going to get started in just a second. Holy cow. Holy cow. Miracles do exist in the world. It's 12:01 and we're getting started without a glitch. For all the people that were texting me, I'm coming, they're not here. Because they're thinking like, oh, Brant's going to have a 10 or 15 delay lag for technical difficulties. Not today, my friends. Not today, my friends. So I know some people are still coming per some messages I got, but they're not here. But we're going to get started. We're going to go ahead and get started. So thank you, everybody, for coming. Appreciate y'all coming out. I know that a lot of different opportunities. Cherry, we're recording, right?
Yes, Brand.
All right, cool. Thank you. So you guys have a lot of different options on how to spend your time, and appreciate you guys coming out. For those of you who are in person, for those of you online as well, spending your time here. I'm going to do my best to make it a very, very, very good use of your time here at the Breakthrough this week. So I appreciate seeing some new faces. What's your name again? Keno. Keno's here. He's a new face. Some new faces in the back. What's up? Keno's here. We like new faces. We like new faces and we like familiar faces. Y'all thought I was going to say old faces. Familiar. That's so much, Wes, that's nicer than, come on, familiar. Sounds nicer. So that's what we're going to do today. So what are we going to be talking about today? Reality over headlines. How many of you guys like scroll on social media, you're watching the news, there's a lot of doom and gloom going on in the news. Well, guess what? There's always going to be a lot of doom and gloom in the news. That's what they do. Okay, that's what they do. It's our job as investors, as entrepreneurs, to sift through all of this information, all of this data, the stuff that's coming to us. And what we basically have to do is create a funnel. What's up, man? We have to create a funnel, okay? So I'm not going to draw on the whiteboard right now, but we've got all this information that's coming into us all day. Even what I'm going to share with you guys right now, I'm going to encourage you guys to not take what I say as gospel, to take in this information in your filter, and you guys get to decide what is truth, what's going to come out, and that's what you're going to take action on. Because what happens in the day and age that we live in, right? We are just flooded with information all of the time. And most oftentimes, especially in the terms of social media, in terms of the news outlets and things like that, a majority of this information is just not true. And what will happen is that we will allow it to become our truth, even though it is on a foundation of sand. And then also we'll let it, this is something that came up a couple weeks ago. I think Ben was in here a minute ago, but I'm sure he'll be back. Ben asked this question about, how do you handle and control your emotions? Because a huge part of being successful as an entrepreneur, it's more than just about, real estate strategy or business strategy. It's a matter of managing our emotions, okay? That's why I spend a majority of my time when I'm spending time like studying and researching and things like that. I've spent a way vastly amount of more time over the years since I began becoming an entrepreneur on investing in my education and personal development, right? And psychology. The first 2 books, I started reading one last year. I reread it this year. 2 books so far this year. The War of Art, which every entrepreneur should read this book. Like, you have to love and be willing to go to war for what you believe in. War of Art. And now I'm reading The Dark Side of Light Chasers, right? It's a psychology book. So we got to manage these battles inside, because this is what we're getting pounded with in the world today, which is a lot of doom and gloom. Unfortunately, a lot of it is true. Okay. So I've kind of like, I would say I would say, I guess, a good job over the years since I started is blocking a lot of this stuff out. Like when I'm going on social media, I'm going on the news and things like that. I'm good about blocking that stuff out. I get in, get out. Like, I usually have an intention with a lot of my time. But every now and then, we'll see something, we'll read something like, oh my gosh, this is going to be bad. I would question that thought, because what we're going into and what this is just data and information I'm sharing with you. They're not predictions. Okay. These are not going to be predictions of what I'm seeing. What I'm going to encourage you guys to do is take this information that you hear today and other places and decipher what is truth and what you can take action on. Once again, not predictions. We're talking about principles. Okay. Your principles. Okay. Your principles are what are going to hold you through these times and help you to elevate. Even though the world may be going down all around us, we can still elevate. And these are going to be our greatest times of opportunity. So principles will win out over your panic, but you can't control your panic if you don't know how to deal with the emotional battles within. So,
where you said the first book was called The War of Art, right?
The War of Art.
That's by Stephen.
That is correct. The Dark Side of Light Chasers by Debbie Ford. So disclaimer, like I said, this is information only. This is educational. It's not considered financial, legal, tax, or investment advice. Any actions taken based on this information are done at your own risk. Always consult licensed professionals before making financial or investment decisions. Okay, don't sue me if things don't go right. Remember, I'm the dude who barely got out of high school. All right, so I'm just sharing you my experiences and my thoughts. So quick introduction for newbies here. What are we about? So there's a lot of different meetups, there's events, all this stuff going on all the time. I get it. I think we're going to be a little bit different. Not going to be a lot of fluff. I'm utilizing the breakthrough to carry out my personal mission statement, which is to motivate, educate, and inspire and equip others to create the business and life that they desire through leading through example. Because when I started 18 years ago, I was broke, living in an apartment, had no aspirations of being an entrepreneur or doing anything. I thought I was just going to be kind of stuck. Why did my computer just turn off? I thought I was going to be stuck, okay, in situations like most people, like middle class, lower class, like, I've got a job. I'm going to be like this mundane existence. And then hopefully I'll retire and have a few free years and then I'll die. That was like kind of my prospects on life. So I decided enough is enough. Started investing in myself, personal development, things like that, as well as real estate information, and I've created like a pretty good life. So got a lot to accomplish. And first tangent of the day, I saw a video from Grant Cardone, and I don't know if y'all saw this a few days ago, and he was told like their plane was having problems and they were told that the brakes were not working and they were getting diverted, all this kind of stuff. And so he goes like, shoots a video and he's like, this may be my last video. We may be, dying today. So it is what it is. But he's like, I haven't accomplished everything that I want in life. But if I died today, I'm not going to have any regrets. Not everything worked out the way that I did, but look, I put all my chips on the table and I went all in. And so I'm like, I kind of feel that same way. Like I'm very, very grateful of where I've gotten, nowhere near I want to go. But if I walk out and get hit by, a Mack truck today, I'm like, I'm good. Like I've lived a full life. I built a good business. I've built a wonderful family. I've been blessed. I've been fortunate. And I've also worked my ass off. Okay. That's the other piece of this. There's information, but information without, Ben, you got to go in timeout, Ben. So information without action is worthless. Okay. So what are we going to do? We're building a community here built on truth. You guys taking ownership for where you're at and taking action. Creating an environment, okay? Your environment that you put yourself in is really important. Making sure that you guys have focus, because so many people, they get into real estate. Oh, you want to become a millionaire or whatever, but they have no specific plan. So we're going to have the focus, not only what we want to create in our business, but also what we want our life to look like. Because I don't want others, at least that I'm mentoring or coaching, making the mistake that I did when I first got into business, was like, I'm just going to make a bunch of money and things are going to be great. And what I ended up doing was neglecting the other core areas of my life for long periods of time. My faith, even my family and my own fitness, my health and things like that. We're not going to live that way, at least not me and my family. So I'm teaching others, like there's a way to have it all, okay? And just creating a standard. What standards are you living by? So I want to chat my standards to challenge you guys to stop drifting, stop settling for less, become the greatest of your version of yourself by doing hard work. And work is absolutely a blessing. I can't pull up my phone. My wife texted me a scripture this morning. It was just talking about work. She's working really hard doing her business because she She went through a period of time where she worked for our first 10 years of marriage. She was like, I don't want to work anymore. I want to raise our kids and our babies and all that. Boom, she did that. 10 years goes by and she's like, tired of these babies. Like, I want to get back in. And now she's coming alive and she's working her butt off. But there is, I believe God honors hard work and we're doing it by the right way and the right principles. So this event, this meetup, this community, whatever you want to call it, though, it is for people, as Roosevelt said, like people in the arena, like being in the arena, getting scarred, getting beaten, getting bruised. And that's where we don't want to be sitting in the stands. Like, I want everyone here that's coming to this event, here and online, like, you're doing deals. Like, that's how you're going to learn. You can go to every single meetup, you can go to every event, you can become an information junkie. It's not going to get you anywhere. I remember when I first started real estate, 3 years later, I was asked to do like a boot camp with a friend of mine. And we had become friends. We did a boot camp. It was like amazing. And I remember there was this lady there, had seen various times, like multiple times, always coming to these events and things like that, little meetups. I was going to multiple meetups every single week. I never really spoken to her in depth. And so we did an event and then we did a group flip project and she was a part of that. So I got to know her a little bit then and I've been seeing her for years. I'm like, tell me about your business. What are you doing? And she had never done a deal. I'm like, she invested years of her life, but never did a deal. So we don't want to be like that. Okay. Time is of the essence. So when I talk about real estate, I do my best to always I may not reference it every time, but the business that I built is built on principles, built on fundamentals. So there's essentially in the world of real estate and business, really, there's 5 fundamentals. It all starts with your focus. Like, what are you committed to? What is like the clear thing that you're building towards? So we have to learn, like, everything starts with a clear focus. If you don't have a clear focus, you're going to be going here and there and there and there. And a year, 2 years, 5 years later, you're going to look and say, I've not gotten any further. Okay. So we have to have clarity on what it is that we want in life and business. And we know how to go out and find those opportunities, which includes analyzing those opportunities, knowing how to set up the marketing to attract those opportunities to us and be able to, decipher and do our feasibility on those opportunities that we're going to take on. The next part of that is learning how to fund those opportunities. Robert Kiyosaki says that the number one skill set of an entrepreneur is the ability to raise capital. So that's why I've spent a lot of my time over the years learning how to raise the capital, which is really comes down to 2 things, right? Being a trustworthy, credible investor and operator, okay? Doing that, operating integrity and bringing good deals to the table. It's as easy as that. It's as easy as that. We're doing an event at the end of April, by the way, so I'll have some promotions coming up pretty soon for that. You guys want to attend that? We're doing a second edition of the private lender playbook that I wrote that we're going to be launching in April. Then fixed part, this is essentially fulfillment. Whether this is a real estate business or whatever type of business, you have to learn how to fulfill the orders in the business that you have and ultimately flip. What does that mean? Flipping a property. It's really converting an idea, an opportunity into cash, into an asset, into something that will ultimately give you the freedom that you want. Okay. In the world of real estate and single family real estate, for me, that's a focus on affordable housing. That means when I'm flipping a property, we're buying it, and then we have these options to flip it, rent it, owner finance, Airbnb. We're even doing a pad split now. We have opportunities to what? Create the freedom in our life. Financial freedom will spill over to other types of freedom. So that's what we teach about. We're not gonna only focus on business in here. I'm gonna integrate personal development conversations, because that's what really truly changed my life after starting out, from humble beginnings. There were 2 books that had the biggest impact on me at that point in time. Was Tony Robbins. It was actually a CD, and then Rich Dad Poor Dad. Like, basically, it just like the whole world just opened up to me, where I had what they call a paradigm shift. Like, I was looking this way, I'm like, wow, I didn't even know this existed. Those books had a big impact on me. Stephen Covey had a huge impact on me. So I just spent a lot of time in personal development. And I didn't realize after 32 years of my life that all the programming that I was allowing to put in here was just bad wiring, right? How was I programmed? By peers, friends, and mainly my family. And that programming was get a job, just over broke, scrape by, be unhappy, and just grind it out, man. And like, that was utterly depressing to me. So I was like, you know what? I'm going to learn how to try to make a whole bunch of money. And then I kind of realized like make money, but also grow, not just grow my business, grow my relationship with God, always daily cultivating family relationships and love and taking care of my fitness. This is the temple. So those are the 4 core areas of life. So you can have power and results in all those areas of life. And like Jesus said, you shall know them by their fruit. I want to produce fruit in all these areas of life. I want to help others do the same. So things that will help you accelerate your growth and your breakthroughs is continually sharpening your mindset. Okay. The wealthiest people that I've met, they read every day. Like, I don't care if you have millions, tens of millions, hundreds of millions, or billions, they're committed to continual growth. Strengthening your mindset, building your skill sets, what you do, the X's and O's of real estate, putting yourself in environments like this, masterminds, other areas where people are learning and growing and committed to growth versus my old environments with my old beer drinking buddies. That was not an environment of growth. I had to detach myself from that environment, put myself in other environments. And it was a little bit scary because we get in our comfort zones. We go into different rooms, different arenas, and it's scary, right? And so that's okay if we're allowing ourselves to what? Be held accountable. So allow yourself to be accountable for what it is that you want to accomplish here. So I have to put the slide in here. I don't like doing it sometimes because it seems like I'm bragging or boasting. But for new people here in person or online, this is kind of like, why should I listen to you? So when I got started, the humble beginnings were, after like barely getting out of high school and stuff like that, I went into law enforcement and it was okay. It was okay. Politics and stuff like that. I decided to leave, went into corporate world. It absolutely sucked. I hated it from day one. My wife had, we were living in an apartment. We had credit card debts. We had student loans. We had like no financial education. We went to a Dave Ramsey class at church. This is great. So we did that and we paid off all our credit cards. And I immediately read Rich Dad Poor Dad soon thereafter. Because I'm like, that was just depressing to follow the Dave Ramsey model. Not that it's bad. I think it's really good. I think it's really good for most people that don't have financial education. But now there's a whole nother level. And we're going to talk about that a little bit today. About the Dave Ramsey model is like save. Savers are winners. In the old world, by the old rules, I believe that was true. Today, I don't believe that's true. Kiyosaki's philosophy is what? What does Kiyosaki say about savers? Who knows what Kiyosaki says about savers? Savers are losers. So we're going to talk about that a little bit today. So I learned how to utilize leverage, buy real estate with no money down. And since I've gone, I've done 500 something deals. Vast majority of these focus on single family and affordable housing. But what I like to share the most is like starting from nothing, actually using a credit card to buy my first property, 500 plus deals. Like we've maintained a perfect track record with all of our lenders, spanning over like $50 million. I've never missed a payment. And so what I want to say about this is what I've done for almost 20 years has worked. Okay. I've known some really, really, really great entrepreneurs, people I've looked up to, and I swore that they were always going to be more successful than me. And, I've seen a lot of them go out of business, right? So there's some discipline and things like this where I'm like, I try to hold to these fundamentals that I know that are true, even when there's temptations that come other areas. Like what I'm building my business on or have built it on is built on fundamentals. So that's what I want to share. That's what I want you to take away from this. All right. So quick couple things and we'll get into today's presentation. Participation protocol. If you guys have some questions, feel free, raise your hand. I want to make sure though that the questions are in alignment with what we're talking about. We don't want to chase too many squirrels. I love chasing squirrels and rabbits, but we have a little bit of time. So keep questions on track. If you have other questions, topic requests, message me and we'll try to work those in. Venue update. We were a little unsure about the venue update. We are loving our folks here at Closed Title. They're about to come up here in a second. Aldridge is. But on occasion, I travel a lot, so we may just go virtual some weeks. So just always be on the lookout for those updates. So I'm going to invite Aldridge up here. You guys all know Aldridge to talk a little bit about Closed Title.
So you want to make sure we be a resource to them on the tool. Those investors don't have our corporate office capital that he's talking about. And then Rob Wise is my partner. He actually was a builder for 20 years. And he actually has JV agreement, so on the closed side, and he hired me from my previous corporate side. So our job is to do educational classes and get you in front of people for movers and shakers.
And yeah, Closed Title is nationwide too. For you guys watching online, wherever you're at. All right, so let's get into today's focus. Reality over headlines. Understanding the dollar in real estate. Principles, proven principles, right? They're going to defeat panic. And what happens every time there's a major market shift, we see this all the time. There's a major market shift, people panic, people freak out, and they don't make intelligent decisions. Okay. This is how we're wired. Why, over the years, buying single family real estate, I've had so many conversations. I'm talking to people. What do you do? How does it work? They get into the numbers. I'm like, that's crazy. No one would sell their home for 50% of its value. I'm like, you don't have to believe me, but we buy houses like property like that every single month. Okay. Why? Because people aren't making logical decisions. They base it on their emotions. I deal this all the time when I'm talking to sellers. All the time. It's just a gentleman I'm going to meet on Thursday. I've already met him before. We're meeting again on Thursday. And I'm like, if I were you, I tell this to almost every seller that I talk to. Almost, because sometimes it doesn't apply. But most times I tell them I would not sell to a cash investor. If I were you, I would do this to the property. I would sell it this. I would list with an agent. And this is what I would do. You have to be a little bit patient, work through a few things. Nope, I just want to sell to you. I trust you. How can we get this done? I just want to be done. Okay. So what we need to do is going into these times, what are we doing? There's a lot of information going out there about the dollar's going to collapse, America's going to collapse, all this kind of stuff. And I'll be honest, this type of education is not my strong suit. I'm not a big financial markets kind of guy. I never have been. I got into real estate I've heard this before. I didn't get into real estate to make a bunch of money. I got into real estate because I wanted freedom. I wanted to quit my job and I wanted to, just have that freedom. And I, believed that the money would follow and it did, but it started with just wanting freedom. So I never spent a lot of time digging into all these different market cycles and all this kind of stuff over the years. So I encourage you guys, there's something that interests you, find people that are really, really, really educated on. Like Ray Dalio is one that I spoke about last week. So I've been listening a lot to Ray Dalio because he's committed his life to understanding markets and things like that. So what are we looking at today? What do we want to accomplish today? So deciphering what's reality over the headlines. So we're going to talk a little about understanding the dollar in real estate because I don't think a lot of people do, and how's this relationship going to affect the dollar, the cycles, real estate thinking and principles. I'm not going to predict any headlines. We're going to learn how the system behaves. People also ask me that quite a bit. They're like, Brent, what do you think the market's going to do? I'm like, I don't know. It's going to go up, it's going to go down, or it's going to go flat. That's what I think is going to happen. Personally, quick to zoom to the future, I think we're going to go flat for a long time and probably more down than if I were going to guess. But there's a lot of things we don't know what the government's going to do. All these really, really intelligent people that have predicted what's going to happen, even the smartest people have said they've been wrong because there's a world event, there's COVID, there's money printing. There's things that you just can't predict. Yeah, there's all these things, that happen. And so to me, it's foolish to try to predict, right? It's to try to predict. You base your business on principles, on what's been proven over time that's going to work no matter what happens. And so the goal, reduce surprise, increase your preparedness, protect downs. And we're going to talk about some things that you guys can do specifically to take action because there's all these things that are out of our control. And when you're taking in all this, because we can't control what the government's going to do, if there's going to be a war, if we're going to go to some type of crypto, we can't control any of that. All that we can control is what we can control. And if we start focusing and taking action on the things that we can control, now we're going to feel empowered. Now we're going to get our mental sanity back and start moving us in the direction we want to go. So this is real important. So is everybody familiar with the fiat currency, what that means? Okay. So
it's not backed by anything, it's backed by trust.
That's it. It's it. It's paper money. It's funny money. It's essentially monopoly money. Okay. It's monopoly money. So, I learned about this when I first read Rich Dad Poor Dad, read the Cash Flow Quadrant and books like that. But originally, when America was founded, in every great empire, okay, that has existed over the years, was they had a currency system that was backed by something tangible, typically gold, not always gold. There were other forms of metal that were easier to trade, but it was backed on something solid. Okay. I've got this ounce of gold that's worth this amount of currency. I can trade that. That's how America got started. And I encourage you to listen to Ray Dalio about all this. So, but something happened. In 1971, America went off the gold standard. Okay. So previously, every dollar that they printed was tied to how much gold they had in the vault, essentially. But at that point in time, they said, hey, and they kind of did it kind of quietly. We're going to do a bit, but we're going to go right back. And we always trust the government, right? We always trust the government. So no, they never went back. And now $38 trillion later, right? That's what our debt is. And it's uncontrollable. So we went to fiat. We went to a fiat currency. So like Eduardo said, fiat currency is not really backed on anything except for trust. Like, hey, I feel pretty good that this is going to be worth what it is, but I don't really know. And why did we leave the gold standard? Well, because for years it worked really well. And that's how we took over essentially as the world power, was because Great Britain, or the British essentially, was the pound. That was the standard for the world. Okay, that was the controlling currency. Well, then what happened to them? World War I, they kind of went off that. They started printing money. Boom, double whammy. World War II. Now they're printing money to like feed the military, do what they needed to do. So they weaken themselves, right? They weaken themselves. This is going like a Dave Ramsey principle about your debt and things like that. You weaken yourself. And so that's when America took control of being a world power, because the British are like, hey, will y'all partner with us on a world currency? It's like, no, we don't trust your currency anymore. You're in a weakened state. You're indebted up to your eyeballs. We're just going to do our own thing and the world followed. And that's how we came to power. But then several incidents, mainly, the 60s and Vietnam and all this kind of stuff, we just ran out of money. So we started printing money, but we had that predominance. Well, fast forward now 50 something years later, we're 38 trillion in debt. It's increasing every 3 to 4 months by $1 trillion. America is a broke, bankrupt country. And it saddens me to say that, but it's true. But that's the benefit. Is countries, they can add money. Oh, we got this problem, let's print some money. It's basically, if you want something, and rather than saving up for it or taking money that you have in savings, you do what? You put on a credit card. That's what the government's been doing. But if their debt grows faster than the real goods, which for us is GDP, or gross domestic product, and services, then that purchasing power, it declines because of inflation. We've all seen this recently, right? We all see this. I mean, my wife pull our expenses every month. I'm like, how do we spend this much money for the same things just a few years ago? Because our spending hasn't really changed. Like we have a nice house, and we take 2 or 3 vacations a year, yes, but we go to the grocery store, we eat at home most of the time, and this stuff costs 2 or 3 times more than it did 5, 6 years ago. This is why real estate has gone, like real estate hasn't increased in value why a lot of people think it has. It's only increased in value because the government has been printing money. Most assets have gone up like 800% or something like that since like 1970, 1971. Real estate's gone up like 2,800%. Okay. So that's why I think real estate can't go up really anymore. It's got to reset. It's got to come back down to where it's affordable. That's why I think this idea, a lot of people, real estate's always going to go up. I hear this a lot. I've heard it just in the last couple of months by some people. I'm like, let's stop and think about that, because everything can't always go up. So the risk here, too much fiat money, money machines just constantly printing money. Has anyone seen the U.S. debt clock in real time? Y'all seen that? Remind me, I'll show you afterwards. I was showing it to someone this morning. So we were talking about this stuff, and then he's like, holy cow. It's insane. So what happens whenever it gets like too much? So there's a default, and we've seen this in Argentina. We've seen it in Venezuela. We've seen it in other countries. They start printing money. The currency devalues. There's inflation, and there's financial repression, like keeping rates below inflation. That's what we're doing. So it's flexible, and that's the temptation, and that's what all great empires, unfortunately, have always done. Not some of the times, always. And ultimately, they're going to lose their strength, and their demise will assuredly follow. So it's not just U.S. Like if you look at this and you go backwards, like U.S. is the current world power. Before that was the British, the Dutch, Spanish, they were going, discovered the Americas. They were getting gold and all types of stuff from over here. But even they fell off that standard. So we can trace this back to the beginnings of time. The cycle was repeated over and over and over again. Do we think it's going to stop? No, I don't. As much as I love America, I don't. This is going to be proven. So this is also not a presentation to scare you guys. Some of you guys are going to leave this you're going to be feeling stressed. No, there's going to be opportunity here. So this is the point. Every dominant power has shared these at its peak. Okay. Strong trade position, trusted currency, capital markets, or financial innovation. America has done had all these things in military or enforcement power. We're still there. But every dominant power has then also followed a similar path. And we're also here, and we've been here. Rising debt, currency debasement, loss of competitiveness, right? China importing like crazy, and our exports have gone away for a long, long time. I know Trump is trying to do everything. Some people I'm not going to get into politics, but you look at all the stuff that Trump's doing, and it's essentially from what I see, he's essentially, use a football term, he's throwing a Hail Mary. He's just throwing a Hail Mary. So it's if you read behind, you read between the lines, it's like things are really, really, really bad. And obviously political fragmentation, we've got that. People, we're going to have a civil war. There's external challenges all over the world. So the writing's on the wall. Okay. Does anyone not agree with that? The writing's on the wall. So you can look at it, and a naive view, which I used to have, was we're going to figure it out. You base your truth on what your experience has been. But when you start looking at history, I would be foolish to think that we're just going to figure it out and it's going to go back to the old days, the way things were. Don't see that happening. So let's understand the dollar a little bit. So the dollar strengthens when our yields and our interest rates rise relative to others, right? So America's funded on bonds. They'll sell bonds to other countries. China is the majority owner of our bonds, right? But if we have to lower interest rates and there's a lower yield, why would they want to do that, right? If I was offering private lenders 12 or 15%, but I say, hey, I'm only going to pay you 5%. Are they going to keep coming at 5%? No, they're not going to want to invest there. Or if I'm borrowing money from private lenders at 10 or 12% and I stop making payment, if I'm just late on my payments or I stop making payments, do you think they're going to keep? No, what's going to happen? Their confidence is going to go down. I remember I was at a speaking event, and one of my lenders came there, and they came up to me hey, what's wrong? What's going on with so-and-so? I'm like, I don't know. Why do you ask? I'm like, well, because we only invest with two people. We invest with you and we invest with them. And your payments, they're always on time. My payments actually always we set up payments with our lenders to always arrive early. To why? Give them confidence. He's been making payments late, month after month after month. And I'm like, I don't know. I'm not going to comment. I don't know. And so they eventually said, we're not going to invest with him anymore. We're only going to invest with you. And that person did. They went down. That's the same thing that's happening here. Okay. Risk off events happen where US dollar acts as a safe haven. So when there's other things going on in the world, which there often is, there's the Middle East, there's Russia, Ukraine, all this stuff's going on in the East. Are they other countries and people going to feel confident investing there? Probably not. They're going to invest over here. But after what they've seen going on in America in the last, 4 or 5 years, excuse my language, but it's been an absolute shit show over here. That is not instilling confidence in the world. And hey, we've got all this eggs in the America basket, and we see what your debt is doing. We see that y'all are feuding, the right wing versus left wing. It's turmoil. Okay. And so, but if they believe that our growth looks promising and it's speculation, then they're still going to invest with us, right? I've seen some very, very persuasive investors come and go, and I'm like, man, that seems kind of sexy what this person's putting out. And they'll raise a bunch of money and then kaput. Seen this happening way too often recently. So it's the same dynamics with the US and world currencies. So let's talk about what weakens the dollar. Okay. Our yields and interest rates fall relative to others. That's been happening. Why? Why is that been happening? Because America can't afford any more debt. Okay. The debt, like I said, it increases $1 trillion every 3 or 4 months, whatever it is. America's paying, more in debt than it pays for US military. And so every single day, every single minute, we were watching the clock this morning, it was going up like $100,000 every 20 or 30 seconds, like our debt. That's how fast it's escalating. So obviously that's weakening our dollar. Ideally, at least we'd be break even, like we had a balanced economy, but we don't, a balanced budget. So the global risk appetite rises, capital spreads outward when there's risk and turmoil and things like that. Like, you got too much stuff going on. We're going to put our money over there. So our deficits, our debt and money creation grow faster. Why? Because the money's not coming in. Like, we know our underlying principles are not good. So we're going to print money. And then this is rare, but it says the U.S. actively signals a preference for a weaker dollar. Anybody know what Trump did a couple of weeks ago? He kind of hinted that, yeah, I'm okay if the dollar weakens, because it's easier to pay off debt, or at least slow down the debt, if the dollar is weak. So all of this is going on right now as we speak. Once again, you have a choice to say, oh, holy crap, I'm scared, or okay, this is kind of exciting. There's going to be some opportunity here. So the reason I chose to focus on this today was because, John, you asked a question last week, and you were basically like, what happens if all this happens? I don't remember the exact question, but like, what if it's collapsed? What if we go on this super hyperinflation thing? And that question stuck in my mind when I was leaving. I'm like, because I don't know the real answer. Nobody does, but I was like, we need to spend some time on that. So what's the impact going to be on the U.S. economy and real estate, given where every sign says that we're moving, and we're moving right now? So first thing, okay, let's look at interest rates. Everybody thinks that interest rates are going to be the saving grace. And Jerome Powell's out in May as a Fed chairman. The new guy, Mark something, I don't know his name, is coming in, and everybody thinks, well, he's Trump's guy. He's going to lower interest rates. Maybe he will, but I don't think that's going to help. Honestly, I don't think that's going to help very much because of because of the inflation, the money's continue to be printed. Even if the price, okay, this is more affordable, but everything else is increasing at the same time. The insurance, the taxes, all this kind of stuff. Deals today don't make sense, like as keeping as rentals, and buy and hold real estate is much trickier than it used to be because of all the other pieces to that puzzle. So rates are going to track expectations in bonds markets, right? So if bonds are selling higher, the cost of money and cost of capital goes up. So second, higher or volatile rates reduce buyer qualification selectivity. So when there's all this turmoil, all this stuff going on, lack of confidence, even if rates go down, who's ultimately lending them the money? You say banks. Where do banks get their money? It's from the Fed. The Fed really knows what's going on. Like, these people can't afford this stuff. They can't afford it. So it doesn't matter. And just because the Fed rate drops, that doesn't always mean that interest rates drop on mortgages. That does not mean that. Prices, third, the values soften when affordability is crushed unless supply is extremely tight. So we went not long ago from having a supply issue where there wasn't, like during COVID, what were months of inventory in Houston's, for example? It was like a month or something like that. What is it right now? 5-6 months. That means basically if no new houses came on the market, if things continued at their current rate, it would take at least 6 months for all those homes to sell. That's not good for us if you're flipping houses and things like that. And you could say, well, rents are going to rise only to a certain extent. Right now, people can't even, I don't know the percentage, but auto loan defaults are at an all-time high. People can't even afford their car payment. A lot of people. So if they have a car payment and they've got a house payment, a mortgage, or a rent payment to make, they're going to stop paying the car payment first. Typically, what's soon to follow? That. Okay. So they can only pay what they can afford. So rents aren't going to continuously rise. So it all starts with inflation and bond markets. Next comes the rates, interest rates. Right, the Fed rate. And then last is interest rates on homes and the pricing of homes. So this is all downstream. What we are experiencing in the real estate market today is what's happened months and years before. So we're kind of the last out of that funnel. So let's go to John's question from last week. If the dollar fails, what's going to happen? My mind first started going into hyperinflation. You guys heard of hyperinflation? And so that's where Venezuela, and then a big one that people talk about is Germany. Okay, around World War I, they went into hyperinflation to where essentially like people were burning their currency to stay warm because it had no value anymore. And a guy, I forget his name, but he quickly became, in a very short period of time, quickly became the wealthiest man in Germany because he bought a bunch of real estate with debt before they went into hyperinflation. So he was essentially able to pay off, in today's terms, $300,000-$400,000 mortgages with pennies, right? And so I was like, oh, I've heard about hyperinflation. I've read about it a little bit over the years. And I'm like, that'd be really cool. I can just pay off $20 million of real estate debt like this. But then I started researching and studying. I didn't know all this stuff. So there's been other like what you mentioned, Argentina and Venezuela. Other countries, several other countries have went into hyperinflation. So here's what I didn't know, that Germany is an example of other countries that governments will step in. Banks do have fine writing where they can void those. No, you cannot pay this off in these inflationary periods and things like that. So they will put in controls, and don't think that they won't, to protect themselves and their position. So hyperinflation, some people may think, oh, this is going to be my saving grace. Probably not. Probably not. So this collapse, when you look at the other empires that we talked about, originally, like the collapse was slow, then it sped up a little bit, and then the further we progress in civilization, the quicker the collapse happens. So this could happen relatively quickly. We've seen Black Friday events on Wall Street in the market. Whenever people freak out, they make irrational decisions. So that confidence can erode quickly. Inflation can arise quickly, but policy will respond. They'll print more money, and we're doing that again. Print. So now the cash that we have and the money that we have, it just doesn't go very far. But in terms of real estate, that's why real estate has always done really, really well in these times. Why? Because it is a tangible asset. It provides a value. What is that value? Shelter. And that's why, for those of you who, listen to me or know me for a while, I always talk about median price housing and below. This is one of my principles, median price housing and below. Because why? Because if we're investing in this space, inflation comes up, there's still some people may progress up to a higher price point, but that we're insulated here because there's always people coming up. There's work, there's growth, there's low blue collar jobs. So, and we can convert renters to owners. And when market shifts and go down, we gain an influx of people move from high to medium to low. So we're insulated there because people always need shelter. Oh, I'm not going to talk about too much, but it's crazy like how we see the affordability thing now with things like pad split, and where we've seen this for a while where, okay, well, what am I going to do? I can't afford my house. I'm just going to move in with my family. Now you've got families living together in the same home, or people just renting a room because they can't afford a home. It is what it is. People need shelter. Businesses are still going to operate. I'll come back to that in a little bit. And income producing assets matter. Like you got to build your business with cash flow. That's why I've done some development. I'm not 100% opposed to it, but I'm always trying to safeguard my risks. Like people hey, what about this? What about this on development stuff? Development is much higher risk than buying a property that has existing cash flow, but that's already stabilized, or that just needs some value add and you improve it to improve your cash flow and your numbers. So that's one of the principles that we want to look at. What's going to change if the dollar fails? Okay. The asset prices inflate before systems break. Have we not already seen this here? Asset prices skyrocketed. Volatility increases, stability decreases. We've seen that. And governments prioritize control and stability, money printing versus rewarding savers. And this comes into what Kiyosaki's Rich Dad said, that savers are losers in today's world. Okay, they're playing by the old rule book, right? Get a job, invest in your 401k, save, and you're going to do fine. That worked, 175 years ago. It doesn't work today. Does not work today. For a few, if you're a super high income earner, yes, maybe, but it's a very low percentage. So the real estate reality, cash flow is going to beat speculation. Okay. The numbers have to make sense today, period. We were talking about this last night on my coaching call with my students, and we're analyzing a subject to deal. And over subject to started, it's always been around, but it's gotten really popular over the last 4 or 5 years. And the stigma that I have with subject to is where people were like presenting subject to deals, like it would have a low interest rate. You're taking over that financing, but there's like no equity there and there's no cash flow. If you're buying a rental property and let's say it's break even, okay, if it's break even, let's say it loses $100 a month. Is that a sustainable investment strategy?
No.
It's not. And those of us who have rental property, own rental property, know that you need a cushion and you need reserves, and you're going to be putting a lot of that money back in there. So that doesn't make sense. Now, I will tell you, subject to, personally in our business, like we've had multiple deals in the last few months that make a lot of sense. People walking away from 2.25, 2.75% interest rate. We're under contract right now to buy one, 2.75 interest rate. He's going to let us keep it for the lifetime of the loan. And there's equity in it. 5 minutes. Okay. I got to hurry up. Well, do we have a hard stop at 1? Okay, cool. Well, I'm probably going to go over time. So if y'all need to leave, you can, but I'll go over a little bit. This is really important. I'm going to tie it on. So you got to invest for cash flow. Okay. Cash flow doesn't mean that you can't flip houses, but you got to give yourself multiple exit strategies in every deal that you do. And cash flow has to be an option, because if you paint yourself into a corner, especially in the volatile world that we live in, I'm telling you, it's not going to end good. That's a prediction. It's not going to end good. We're playing by principles. We're not betting. Okay. We're not betting. This is not Vegas. This is businesses built on principles. Operators are going to outperform passive owners, meaning when times get tough, when things get a little tricky, like being hands-on is going to be very, very important for your business. And that's why a lot of like the big guys have failed in real estate. Essentially, when we saw the hedge funds so much, but some of them, but when Zillow, how much money did Zillow lose, right? How much money did Open Door lose coming in? So that's one of the advantages for us as small operators is the investment game. It is something that rewards the operators versus these people coming in to try to do this big at scale. It's really, really hard to do. I haven't seen anybody do that over the long term. And conservative leverage and the reserves become critical. Okay. So going back to when I started, I used a credit card and I've been using leverage ever since. But we have to be really cautious with it. And we have to make sure that we also have reserves, because the number one reason, you guys know the number one reason that most investors go out of business, it's not because they don't know how to find good deals. It's not because they don't know how to close deals. It doesn't mean that they don't have profitable deals, but it's a lack of cash flow. They get in a crunch, whether you have a month, 3 months, 6 months, we have to have reserves. Okay. We have to have reserves. There's times where I have had to tap into my reserves. Last week, I was like looking at, I was going to sell some silver last week. My wife bumped into one of my really good friends yesterday. They're at Half Price Books. She was talking to him. He's like, he just sold a bunch of silver the day before. It went up and then it crashed. I was like, let me just see, maybe I'll take out this amount or that amount, whatever, and put it in the storehouse and use it for some other things. I called my coin guy on Friday. I'm like, hey, what can I get for silver? What's this going to ounce? He's like, bro, you ain't seen the news? I'm like, no. My news time is like 8 o'clock at night when I'm laying on bed. I'm scrolling on X. He's like, check the news, man. Like, just like that, right? So we got to be careful, make sure we have reserves. So key takeaway, currency crises are going to reshuffles winners. It's not going to end the economy. Even if things go really, really bad, doom and gloom, there's going to be winners and there's going to be losers. And the people that leverage wisely, whether this is doing deals on your own, whether it's bringing in money partners and JVs and bringing in passive investors with you as the operators, which is something I've done a lot in the past. I'm going to be doing that more in the future. I'm going to give up some equity. Why? To safeguard my position and my investor's position. Does this make sense? Take control. So what can you do? So if you're a real estate investor, underwrite very, very conservatively. look at your rates, over budget for rehab costs, your days on days on market. Right now, when we're looking at a flip property, certain markets, I'm like, this thing's going to sell. During COVID, we're like, days on was like, how many weeks is this going to be on the market? Now, 6 months default is meaning that's our default setting. We're looking at a minimum of 6 months. And ideally for a deal to pencil out for us, Wes, how many months do we want to be profitable at? 12, right? Off of a chart that we use. We want to see where even if it doesn't sell for 12 months, we're still in the black. We're still making money. Very important. Prioritize your cash flow, okay? And investments that survive higher rates. What are we looking at here? Mainly real estate. And when I say that, this is important. Investments that survive higher rates. What am I talking about? Long-term fixed rate mortgages. There's already beginning to be a bloodbath for commercial investors that had what? ARMs, adjustable rate mortgages that are now adjusting. That's not good. That's not good. That's like our friend that we're working with this, buying this home. It's a 2.75% interest rate for 30 years. Think we're going to be good with that? Probably so. If inflation is inflating at 3, 4, 5%, that debt on that is it's essentially just decreasing with time as our friend. Maintain liquidity. You have to have some reserves, my friends. If you don't have reserves, it doesn't mean that you don't do deals. It means you bring in equity partners and cash partners. Okay. Give up some equity to get into the game, because what's going to happen, what I believe is going to happen, this is what's happened over and over again, guys. And this is why savers are losers. And this is why if you just have a job, and I'm not getting onto you, I'm saying consider changing your strategy to move forward, because whenever all these assets go up, and if you're just renting a home, for example, and you have no assets, you're taking the brunt of the downside and you're not getting the rewards of the upside. So we got to put ourselves in position to be rewarded when things go up. And this is it's monopoly. This is how the game is played. Mandatory. You got to have multiple exit strategies on every deal that you do. If you only have one strategy, that strategy doesn't work. You have no strategy, you're out of business. Raise capital the right way. I'm going to be probably focusing more on that in the next month or two leading up to the event that we're going to be doing. And I think it's going to be it is what Kiyosaki said, the number one skill set of a real estate entrepreneur. So I'm going to encourage you guys, if you don't have that skill set, to begin learning it. It's the only reason I'm still in business today. Because I started out borrowing hard money and refinancing with the bank. And then after 10 deals, the bank said, you can't borrow anymore. And I had other people that I was in environment and a community with, they just stopped. Well, I can't do it anymore. I'm like, no, raise money, like partner. Like there's ways to get through this, and you help yourself and you help others. Diversify. Don't be a one-trick pony. Okay. It's good to have focus and clarity, but you have to also have discernment when things are changing. Like when I saw the market just kept going up, all these investors are coming in single family. I was like, this is not going to be sustainable. Where are there more opportunities at where there's less competition? That's why I started moving into notes, lending, mobile home parks, RV parks, mobile homes on land, all that kind of stuff. I've diversified within my lane, if that makes sense. I'm in the affordable housing lane, but I've diversified within it rather than just only having one strategy there. And then lastly, this is really, really important. Don't get too far away from your focus, but you can create a bolt-on business. Like I've seen this happen a lot where people say, I want to be a full-time real estate investor. Okay. And that's great. But consider as you're building that business to find a bolt-on business, a business that's synergistic with your investing. So one of the other things that have helped me to be sustainable and to continue investing was after my third year in real estate, I was doing, had rentals, began flipping. I had a really good construction team where my lender at the time suggested, he's like, have you ever thought of doing construction for other people? I had never thought about it, but I did it. And what that came for me was a bolt-on business that I could put my deals into, but also do it for other people. So now it was an asset and an income stream. So over the years, we've bolted on a construction business, a lending business, and a management company, and a coaching and consulting company that are synergistic. So if you're like, man, Brent, I know I need to invest, and maybe you want to go full time, maybe you don't, but you probably also have another skill set, something that you're passionate about, something you enjoy, maybe a realtor, you may like construction, you may enjoy lending, you may be a property manager. There's all these things that you can do. Have a business that you enjoy, that puts money into your bank account every single month, that also helps you to fulfill your investing. So when my investments are going great, that's great. They feed themselves and I can reinvest that money into them. When they're not going great, that's okay. Why? Because I have these other income streams, right? It's so important. If you haven't read Rich Dad Poor, Dad, read it. A better book that a lot of people have heard about is Cash Flow Quadrant. A much better book in terms of like really executing things. So this is huge. Like, take control, cut out, like taking a little information, what the doom and gloom and stuff that's going on, like 5-10%, 80-90%, you need to be here taking control of what you can take control of. Okay. Agents, same thing. Take control. If you are putting all your eggs in the retail listing basket, that's going to work for, I don't know what percentage of agents. It's a very, very small percent. Ask what's his face from Keller Williams, Millionaire Real Estate Agent book. It's a very small percentage, especially in today's market. That's a little bit scary. So yeah, Gary Keller, he wrote a couple of great books I recommend as well. 3 great books: Millionaire Real Estate Agent, Millionaire Real Estate Investor, and The One Thing. Really great books. So in all this time of uncertainty, you're talking to people, become certainty in your understanding, your awareness of the market. So perhaps you begin working with investors. Ben will talk about this. I'll probably have Ben share in just a minute, and we'll talk about what's going on tomorrow, our event tomorrow. So become that certainty in an uncertain market. Expand your offerings, begin working with investors, creative finance deals, sub-2 deals. Like, you could just build your business off of expired listings and going after sub-2 deals now. Maybe, looking at the commercial market, partner with investors. Just because you're an agent now, if you learn how to bring good deals to the table and you know the principles that lenders are attracted to, do some deals, partner with people, grow your business, and invest in real estate. You don't just have to be a real estate agent for life. I've met a lot of agents like, man, I've been doing this. I've been an agent for 10, 20 years, and they own 0 real estate, and they have 100% regret every single one I've spoken to. Don't do that. Start today. So that's the summary. The fiat system that we're on, it's going to extend a cycle, but that cycle is going to end. Unfortunately, that's where I think that we're at. Okay. When the dollar moves, okay, rates, safety, confidence, they're also going to move. Meaning the more that money's printed, that confidence is going to go. Real estate's going to react through what? Rates, activity, and prices, and money printing. Okay. Inevitably, we know historically that real estate is going to go up. It's just the way it's gone up 2,800% in the last 40, 50 years. There may be some flat times. There may be even some dips, but in the long run, it will go up. So control what you can control: your cash flow, your liquidity, how you underwrite deals, multiple exit strategies, and partners. You're like, I don't have money for this deal. It doesn't need to be your money. It could be someone else. Don't get paid. Learn to play the game. Fiat fuels in inflation. So understand that. Spend some time to invest in your education so you understand the rules of the game. So many people are playing by the old rules. And remember, that kind of ties into that. Savers or losers. So build a business and invest in real estate. So hope y'all enjoyed that. That's what I have. So real quick, I have 2 more things. Ben, you want to come up real quick? So this is Mr. Ben Deal. We've got an event coming up tomorrow at noon, and we're only live for this. Is that correct? For tomorrow?
We can live stream.
Well, maybe we can. If not, well, I know we'll have a recording, but y'all can still get registered if you are virtual or Facebook Live. You can still get registered. If we live stream, we'll live stream. If we don't, we don't.
Yeah.
But
Awesome. All right, how's everybody doing? Good to see you. So I'm super excited, Griffin, for Brant. He's back and doing these presentations week to week. Brant's the entire reason why I'm here. So
I'm not his father, but
no.
the entire reason.
Within the world of real estate. That's hilarious. But yeah.
Ben Phillips, everybody.
Yeah.
Real name.
Yeah, we're super excited. So how many people are real estate agents and investors, if you're thinking about getting licensed? One of the ways you've got a opportunity to get connected with myself, Brant, a lot of people in our team and community is with your real estate license. So I got connected, had nothing to do, very little to do with the brokerage that we're with, had everything to do with the people that we get to work with. And Brant and Chris Bounds were the two guys that through 10 years being in this business, guys that I know, like, trust, they're men of faith, got great families, marriages are great. And more important, and more in addition to all that, they're doing the business in the way that I want to do it. And so created wealth and success in real estate. So what we're doing tomorrow, we're getting a lot of our team leadership together to share with you all about what we're doing with our team and community. Steinbrook is coming into town. If you don't know the Wolfpack, if you've seen what we're doing, what we talked about, the Wolfpack is one of the most dynamic teams and communities in the entire real estate industry. We're dominating inside of the EXP, but more importantly, inside of the entire real estate industry. We've got incredible momentum. We're just passed over 4,000 agents globally. So we're making an impact here in Houston. And what's happening with our entire movement. Connor founded Wolfpack 8 years ago. So he's going to be in town. Going to get to hear from him, myself, Brant, Wes, Uber, and then Chris is actually going to be tied up with some of his AI stuff. But we're getting our entire team, community, and those that are interested to learn about what we're doing, just get to hear what's working in terms of the leadership, team building, and the opportunities there. So if you're interested and want to learn about what we're doing, I've got a flyer. If you can't make it tomorrow, no problem. Lunch will be provided from 12 to 2 o'clock, and mortgage at their event space in the Post Gallery area. So,
yep. Sweet. Yeah. And if you want to get plugged in, whether you're an investor, you're an agent, or you're both, there's a QR code up here. You can scan that, fill out some information. Whether you're looking to invest, whether you're looking to grow your business as an agent, either way. You'll be connected with the right person, and we'll get you moving forward so you can begin to launch your business. We also have multiple calls each and every week. So we have multiple calls each week for our agent investors. That's one of the reasons the Wolfpack has grown so quickly. So we've got focus groups each and every week to help them build their business. Connor leads one, Chris leads one, Les and Ben lead one. And then I have another coaching group as well for people who are like focused on investing as well. So either of those ways, of whether you're here local to Houston or anywhere, like literally globally, we've got agents and investors that are joining our group from all parts of the world now. So scan the QR code, get plugged in. And Robert, you want to come up and say something? Guys, so this is Robert Wiseman, who owns this building and close title here, and he's going to just say hi. Good to see you.
How's everybody doing? Got some
We'll get you on camera.
some good information. What'd y'all learn?
Money, cash flow quadrant's great.
Cool. Yeah, those are good. Yeah. So my name is Rob Wiseman. I am a partner in Post Title Houston, which is a headquarter here in this building. I'm also a licensed real estate broker, and I have a lending company by the name of Post Now Lending. So I started the lending company because in my business, I was doing a lot of loans for like DSCR and construction, because I also built a variety of different properties. And so, falling into the title role, I figured it was a way to generate some additional business for the title company. And it just kind of mushroomed because we're meeting so many different people, and there's a lot of new investors or developers that are starting, and there's just information that they don't structuring the companies or the entities, or when there's private capital involved, and a ton of different things. And so I created a niche for myself in that respect. And so that's kind of what my focus is. But aside from that, what you guys are experiencing now with Brant and his team in terms of just education. So I'm really a big advocate for education. So I'm always open to providing this space and just us in general as a resource to anybody that's wanting to provide educational content to people like yourselves. Because I was in your shoes years ago. At that time, there weren't people who were like, "Hey, Rob, what are you trying to do? Let me help you." It's kind of real secluded, and people figured out a strategy. They didn't want to share because they didn't want competition. You know what I'm saying? And so it was like, man, I had to just figure it out. We don't have there wasn't social media back then, so it wasn't like you could just get online and find some stuff.
Yeah.
You find somebody that's like, "Hey, come here. What are you trying to do? Let me show you how to do it." Whether that was a lender or another investor or even title companies. I learned a lot from escrow officers, just going to them, and they're like, "Well, what are you trying to do?" And I said, "Well, this is what I'm trying to do." Not trying to sound like I didn't know what I was doing, but I wanted to at least get their help. And they were like, "Well, here's how you structure it." So all over the years, fast forward to today, all of those experiences help me. And so I'm fortunate, and my give back is just to be, 1,000% transparent about what I do, because I don't feel like sharing information is a detriment to what I'm doing, because I'm not in competition with anybody. You know what I'm saying? So, but I appreciate you guys being here. Thank you for the opportunity to host this, and hopefully, we can do some business together.
No, one thing you said is not true. Because you said we didn't have social media back then. You make us sound old. We had MySpace. We had MySpace. That's what we had. Yeah, that was our social media back then. I think that's about it. That's some of these young kids like, what? How old are y'all? Y'all didn't have social media back then? Oh,
First time I had to introduce the computer, I was in high school.
yeah.
So
We had typing class. I have one. I want to introduce y'all to one other person real quick. Come up, Josh. This was not planned, but this is Joshua McClamrock from Big State Roof Solutions, who also happens to be not my son, but my nephew. So, Josh, tell them about what you guys are doing.
I mean, right now I'm working with my dad, his brother-in-law, and we've basically just been going around flipping putting a bunch of roofs on. We started really expanding during Barrel. We started doing insurance jobs, and I hope Brand doesn't like those too much, but insurance can be difficult to work with. But we've got anybody. We've worked with a ton of. I'm losing the word in my head right now. Homeowners, investors. We put on low level, high level. Any roof that anybody could need, we've got it. We started doing metal roofing, tile roofing, and we've got basically anybody in any field. And we're almost able to do a full remodel. And now that we're working with Brant, I was working for Brant for about 2 years, which helped me a lot. He had 750,000 items on his, big item list for a remodel. Roofing was only about 20 items, so very easy to get into. But yeah, we've been working together now, and we're able to do basically a full house remodel plus the roof on top for anything and everybody and all the needs. So that's what we got going on.
And Josh is turning into a little social media influencer with Big State. All right. Well, thank you everyone for coming out. I hope I'll see you guys again next week, Tuesday at noon and tomorrow at noon.